The baseline scenario is what would have happened on this land if your project didn't exist. The credit you sell is the difference between what actually happened and what would have happened without you. Get the baseline wrong. Too pessimistic, overstating what would have occurred, and you're overclaiming credits. Too conservative, understating it, and you're leaving money on the table. This video covers how to define, document, and defend your baseline scenario, and how to pass the additionality test that Verra requires before any credits can be issued. Start with what farmers were actually doing before the project started. For a cover crop adoption project, the baseline is straightforward. No cover crops. Conventional tillage, the same crop rotation they've run for the past decade. But that statement needs evidence. The farmer told me is not sufficient documentation. The VVB will ask for specific records. So let's talk about what records actually pass VVB scrutiny. Tier 1, the best evidence, is farm machinery records and input purchase records. Tractor GPS logs, fuel receipts, and equipment rental invoices show what tillage events occurred, when, and approximately how deep. Input purchase records, seed, fertilizer, pesticide receipts, show what was applied and when. For a cover crop baseline, the absence of cover crop seed purchases in prior years is itself evidence. You're demonstrating that cover cropping was not occurring by showing there were no cover crop seed purchases. Tier 2 evidence is good. Crop sales records like grain elevator receipts and crop insurance confirm the crop sequence and approximate yields. USDA FSA farm data and conservation program records round this out. Tier 3 is supporting evidence, not sufficient on its own. Satellite imagery is increasingly useful. NDVI time series from Landsat or Sentinel can show the absence of winter greenup between harvest and spring planting, which is visible from space and indicates no cover crop was present. Farmer declarations are Tier 3. They need to be corroborated. You need at minimum 3 years of baseline documentation. 5 to 10 years is better. The longer the baseline period, the more credible the claim that the current practice represents true business as usual. There are 3 ways to establish baseline SOC stocks. Option A, pre-project measurement, is the strongest approach. Sample the project sites before the management change begins. This uses the same methodology as monitoring. There are no model assumptions, and the baseline and monitoring data are directly comparable. This is what I recommend for any project where the economics support it. Option B uses historical soil survey data, soil grids, USDA Surgo, or national surveys, combined with correction factors for management history. This is acceptable when pre-project sampling isn't feasible, but introduces additional uncertainty that must be quantified. Option C uses IPCC Tier 1 defaults. These are conservative. They tend to underestimate actual stocks, which means smaller baseline SOC and potentially smaller credits. Acceptable and defensible, but may leave value on the table. One thing that catches people off guard: the baseline SOC stock calculation must use the same ESM correction method as the monitoring calculation. Same depth increments, same reference mass selection procedure. If you switch methods between baseline and monitoring, the comparison is invalid. This also means the reference mass, the minimum cumulative soil mass used in the ESM correction, must be calculated across all plots from all time periods together. Baseline and monitoring profiles in one call. If you calculate the reference mass only from monitoring profiles and apply a different mass to the baseline, the VVB will catch it. Video 6 covers ESM correction in full detail. Additionality is the claim that your project creates genuine emission reductions that would not have occurred otherwise. It's the most frequently challenged aspect of voluntary carbon projects, and the one most likely to attract scrutiny from buyers, carbon rating agencies, and journalists. VM0042 uses a 3-part test. You need to pass all 3 parts, or qualify for the positive list exception, which I'll cover at the end of this section. Be precise and do not overstate. This is the part of the PDD that external critics will read most carefully. Part 1. Regulatory Additionality. The practice must not be required by law. In practice, subsidized is not the same as mandatory. USDA EQP payments for cover crops are incentives, not requirements. The practice remains voluntary. That passes. Part 1. What fails? Tillage restrictions in a conservation reserve program contract, no-till requirements in a wetland mitigation agreement, or mandatory green cover under EU CAP eco schemes in some regions. Check the actual text of any program your participants are enrolled in. Don't rely on your understanding of the program. Read the contract language. Part 2. Financial Additionality. The practice must not be profitable without carbon revenue. This requires an actual economic analysis, not an industry average, not a peer-reviewed estimate, but an analysis at your project location with local input costs and crop prices. For cover crops in the U.S. Midwest, seed cost is approximately $40 to $60 per acre per year. The direct agronomic benefit, reduced erosion, improved water retention, modest yield bump, typically doesn't cover that cost in years 1 through 3. The practice is not financially self-sustaining without external revenue. That passes Part 2. Be careful with crop rotations that add marketable cash crops. If the rotation itself generates enough revenue, the financial additionality argument becomes much harder to make. Document carefully. Part 3. Common practice. The practice must not already be widespread in the region. The informal threshold used widely in VCS project documentation is 30% adoption. State your source, state the year, state the percentage. The sentence you need is something like, cover crop adoption in Iowa was 11% of corn acres in 2022, per USDA NASS 2022 Agricultural Survey. That's the sentence. For U.S. projects, USDA NASS surveys are published annually by state and county. For EU projects, Eurostat FADN database. For China, National Bureau of Statistics Agricultural Census and county-level agricultural yearbooks. For other regions, FAO GAI's database, published academic surveys, or Extension Service reports. Cite the most recent published data available. There's also a positive list in VM0042. Activities on the positive list are presumed additional without requiring Parts 2 and 3. You only need to confirm Part 1, Regulatory Additionality. Cover crop adoption in regions with less than 20% adoption qualifies for the positive list. Check the current VM0042 version 2.1 appendix for the full list. It's updated periodically. If you qualify for the positive list, document Part 1 thoroughly. The positive list eliminates the financial and common practice tests, but regulatory additionality is still required. Don't skip it. Let me show the baseline documentation template, Excel Template 6, for our Iowa scenario. I fill in the basic project information. Iowa Cover Crop Project, 2015 to 2020 baseline period. Cropland, conventional tillage with no cover crops. For evidence sources, I list 3. Farm machinery records for 2015 through 2020, crop sales records including grain elevator receipts, and Landsat satellite imagery showing no winter NDVI signal in November through March, confirming no cover crop was present. For baseline SOC, I enter the pre-project measurement value, 38.5 megagrams of carbon per hectare, from direct field sampling before the cover crop adoption began. After filling in the inputs, run the macro, run baseline doc. The PDD Section 5 sheet populates automatically. The output is the full PDD Section 5 text. It includes all the required elements: the baseline practice description, evidence sources with tier classification, the baseline SOC value, the zero change rate assumption, and the additionality text for all 3 parts. Review the additionality section carefully against your actual documentation before submitting to the VVB. The macro uses the inputs you provided: evidence type, adoption rate, legal references. It's a draft. It's not a finished legal document. You are responsible for its accuracy. One question that sometimes comes up: what if the baseline SOC was already changing before the project started? Under a declining SOC baseline, say continuous corn-depleting organic matter, the project gets credit for the avoided decline, plus any actual increase it causes. This can substantially increase the credit claim. VM0042 allows you to demonstrate a non-zero baseline change rate using paired control plots that receive no management change over the project period, a validated process model calibrated to the region, or historical data from long-term monitoring studies. In practice, most projects assume a zero baseline change rate. It's conservative and easier to defend. If your baseline SOC was genuinely declining, consult Chapter 3 of the PDF guide and consider bringing in a soil scientist who can defend a non-zero rate to the VVB.